In terms of some of the movements on the market, Chris Weston, who else from RG Markets in Melbourne, joins us now. Chris, we just saw a breakdown of the Aussie dollar. We saw a little bit weaker against the US. However, nobody's faring as badly as the euro at the moment.
No, it's not going to. I mean, the euro is just, as you mentioned there 5 minutes ago or so, it's just the #1 currency, funding currency now, and will continue to be so. ECB member Mr. Kerr over the weekend talking about perhaps going down to negative real deposit rates. Again, a lot of that money that's parked with the ECB is going to be coming off the sidelines and hunting out yield of any kind of description. We've already know that we've got negative rates in 6 core and semi-core countries in Europe, and that will continue to be the case. That will feed into perhaps a continued weaker euro. You've got the Greek situation as well, which is continuing to look like it's getting in even a worse situation. You've got the German Finance Minister, Mr. Rosler, coming out and saying that Greece just simply aren't going to meet its memorandum of understanding, and they shouldn't get more aid in that time. We've got the IMF, and there's going to be a report coming out in tonight's Der Spiegel magazine in Germany talking about potentially withdrawing any further aid for Greece, and talking about potentially September as a time when we get a default. Perhaps another restructure like we saw recently. We saw that 75% haircut to the net present value. Perhaps that could be further on the cards further down the line, but perhaps include some of the seniority holdings as well, perhaps some of the ECB holdings. That's been largely talked about for the last couple of days. We know Troika are in Greece at the moment, and it will be tomorrow, to have a look at how they're keeping up with their budget deficit targets, and that clearly isn't going to hold up very well at all. And then obviously we've got Spain. We know exactly what's happening in Spain. It's just getting worse and worse by the day in Spain. They've downgraded their own GDP forecast to 0.5% for next year, which in my mind is still a bit optimistic when you've got that kind of austerity and levels of unemployment that they've got through. And you've got a number of regions now tapping this bailout for 18 billion bailout fund. You've got Valencia on Friday. They caused some downside. You've got the Catalonia region as well, and perhaps Murcia as well coming out further down the line. You've got a situation, with just the Spanish economy just looks in terrible shape, and you've got if you look at the yield curve now in Spain. Last week we saw a difference between 2- and 10-year bonds at about 211 basis points. After Friday's settlement, we've got a situation now 150 basis points. So we've got a flattening of the yield curve. If you've got that rate of projection, probably in a week or 2 weeks' time, we're actually going to have a convex yield curve going through, which I don't think is going to be a good situation going forward at all. So look, the euro is continuing to get weaker at the moment. I've been looking at euro yen. I think that trade still works quite well. Be looking to work offers just about sort of Thursday's high at 96.80. I don't think we're even going to get that kind of bounce, and I think perhaps we could get if we get a close below the recent high or the recent low at 95.60. We get close below there tonight, then I think the momentum traders will be happy to sit in there and just continue push the euro lower.
Just staying with Europe, Chris, it was interesting to see the ratification, if you like, of the bailout package for Spanish banks. Barely raised a whimper when you looked at the yields on Spanish debt, around 7.27% or so on that Friday night. But also, Herr Rosler, you made mention of the economy minister out of Germany, suggesting he's got doubts as to whether or not Greece will meet the Troika demands for the next term of the bailout. He also said, very matter of fact, that Greece's exit from the euro had lost its terror. Look, would you agree with that? Are people becoming a little bit more sort of numbed to the idea of it, or do you think there would be a bit of a catastrophic fallout or reaction should we see that?
I don't necessarily think we're going to get a Greek exit just yet. I think the political leaders have suggested that they're continuing to try and work with the Greeks. We know Mr. Samaras is in there at the moment in Europe, trying to work with different European leaders, trying to renegotiate what's happened. I think that it's not going to be as big an issue as it was when we saw a big move down to the previous low of 128.88 earlier in the year. That was because people were really worried that the market just wasn't prepared for a Greek exit. I think the market's moved on, and I think it's really about Spain now and what happens there. We saw Egan-Jones, who are the independent ratings agency, which have been downgrading European sovereigns left, right and centre over the last 3 or 4 weeks, and they've said that the chances of a restructure of Spanish debt perhaps next year have been markedly increased. So I think a Greek exit would certainly not be a positive in any shape or form. But I think the market's moved on to bigger fish now. The market's all about Spain, what's going to happen there with their yields completely at unsustainable levels. The Spanish government themselves over the weekend, in an article in the Wall Street Journal, have come out and said, look, we need the ECB to come out and help. The ECB are really the only mechanism now who can solve this crisis. At the same time, and they want them to come out using their securities market programme to buy bonds in the secondary market. Mario Draghi at the same time coming out saying we're not going to put our balance sheet at risk. But back to your original point, now you saw this situation where we got the 100 billion euros of loans that was largely priced into the market. But if you think back to the European Summit, now the European Summit, the part of the reason why the markets were so happy about that was because the negative feedback loop between European banks or Spanish banks and the sovereign had been broken. The Germans over the weekend as well coming out and saying, look, that's not the case at all. The Spanish sovereign are totally on the hook for these loans. So good that the banks have got the loans. It avoids, feeds liquidity into them. But at the same time, it's the Spanish sovereign that wears the fiscal worries about this. So the negative feedback loop has actually remained very much intact and remains a very big euro worry.
Look, Chris, we don't like to make light of obviously the issues very much being faced in Spain, but you did send an interesting picture, and I think it really illustrates how tough things are getting in Spain at the moment. Here is a picture on screen of the Spanish Olympic outfit. There are problems in this economy.
Well, I think it's going to take on, to be honest. I think it's one of those kind of retro things. I mean, finally they're going to look like a load of McDonald's workers. No offence to McDonald's workers, but I think that's what they're going to look like. But at the same time, I think it's going to take on. I think it's one of those things in 5 or 6 years' time, there'll be people wearing the Spanish outfits as kind of retro gear. But I think there's a lot of people in Spain at the moment who are protesting against austerity measures in there, and perhaps this is the sort of light-hearted sort of gestures we need to sort of take away some of that pressure in the short term.
Well, in terms of retro look, Brooke every morning still rocks up in a Sydney 2000 volunteer outfit, so certainly there's a market for it out there.
And she's probably got the banana golden green stripes of the cricket outfits of the 70s as well.
Nice.
Chris, am I in on this, or just you're going to chat amongst yourselves about
me? You just have to cop it. Chris, got to leave it there. Thanks a lot, mate. Appreciate it.
Thanks, James.
That is a dirty rumour about